What is going on, investors? Hopefully you guys had a great day out there. Time to catch up with Teladoc, a stock that we have not covered here on the channel since about August. So we skipped an earnings report. So let's catch up and see what's going on with Teladoc Health, ticker symbol TDOC. $37 billion market cap over the last year, just up 125% on this one. But they reported earnings after the bell today, and the stock is selling off. We were up here, and now we're down here. Spoiler alert, we're actually on a critical level, and we're approaching it's kind of demand zones for Teladoc. We'll talk about that when we get over to the stock chart, just in case you want to buy shares of this, or you want to add to your position, or whatever it might be, or maybe you're worried you bought some Teladoc and you're worried it might go lower. We'll talk about all those things here in a second, but let's jump over to the numbers here really quickly. Shares are under pressure after announcing softer guidance, could be also referred to maybe as conservative guidance. I'm going to show you something really quickly here. So they guided to $1.95 to $2 billion in revenue. That is going to be pretty strong growth, but you notice here we made about $1 billion in this year. So slowing in that perspective, because you see here we went from 500 million up to $1 billion in yearly growth. Here's the thing that I think might be concerning investors in a particular way. They're saying U.S. paid membership at the end of the year, end of 2021, expected to be between 52 and 54 million, implying just marginal growth rate. Because take a look, we see here we've got already we have 51.8 million in terms of U.S. paid membership. And again, they're only guiding to like a fraction of that going up. So it could be that people are worried that the number of paid customers are already kind of baked in, and now they're going to have to try to extract more money from them. And that could be a challenging thing for Teladoc. Now, one company that believes in Teladoc is Ark Invest. They have this ETF that is the ARKG, the Genomic Revolution ETF. Be honest with you, a lot of the companies in this ETF are what I would consider somewhat speculative, okay? They're not like name brands like Regeneron and Teladoc and maybe Novartis, but there's a lot of companies on here that are relatively new and haven't been proven over the long period of time. We see here that Teladoc Health is about 8% of the top 10 holdings. Now, Ark hasn't added to this position, at least according to my information, in a while. What I think will be interesting, will Ark Invest decide to add and buy the dip on Teladoc? We'll see what they do in the coming days with that, because like I said, the stock is dipping down in the after hours. So I showed you this. They got the U.S. paid membership up 41% over the last year, but they're guiding this year to basically flat on that. And I think some investors are digesting that news. Now, on to the revenues. Let's take a look here. Let's see what's going on here. I think you can guess that this company has explosive revenue growth. We've got the quarter ended here 19 over 20. We've got the year ended here 19 over 20 here. And we see just explosive growth on the revenue side, basically doubling, actually more than doubling in the quarter to $383 million. You see for the year end, we went from 550 up to about $1.1 billion on the revenue side. Now, cost of revenue is very nice. This is a juicy high margin kind of gross margin story here. You see we spent $390 to make $1.1 billion for the full year. And in the quarter, we spent about $122 million to make $383. Those are great margins. I don't think anybody is worried about that. The problem is, when you come down here and look at operating expenses, they have absolutely blown up. You see, over the last year on a quarterly basis, we went from $172 million in expenses on the operating side all the way up to $841 million in a quarter. Take a look. We made $1.1 billion in revenue in a year. But in a quarter, we spent $841 million. I think people are somewhat concerned about this. Take a look at this G&A line. Went from $44 million up to added $300 million. Nearly a third of our revenue we added here on the G&A side. I think that's having investors kind of concerned a little bit. We see loss from operations went from a $15 million loss, boom, all the way up to a $458 million loss. it was kind of a disaster quarter because take a look. For the full year, they lost $506 million, and just in the quarter, they lost $458 million of that. So it was just a gigantic quarter from a cost perspective. And when you get over to the guidance, we're not blowing it out of the water on the revenue side, and we're not blowing it out of the water on a kind of membership growth side. And I think that has investors concerned. Now, could Teladoc be sandbagging a little bit? That certainly could be the case. We'll see what happens. But either way, they're not going to turn a profit next year, okay? It's just with this type of fee structure, this type of operating structure, they're just not going to turn a profit. You see, they lost about $3.07 this year in the quarter, and for the full year, lost $5.36 per share. You see, the number of shares outstanding is going up. I would likely consider that to probably be something that will continue to go up in the future. So you'll see more dilution in this one and likely more losses on the operating side as well. Now, moving over to the stock chart, this one is pulled back and it is pulled back. I actually had this line marked out since August. So we analyzed the stock back up in this price range here. And I had this line in here because we topped out here. It kind of chopped around right here. We topped out perfectly here. We topped out here. Once you break right here at $238 per share with a strong green candle, it was off to the races. We went from about $238 all the way up to over $300 on this stock. Now it's pulled back almost exactly right on the dot, right at about $238, $239 per share. You call it $240 per share if you want a nice little round number to remember this video by. So $240 per share, right where TDOC is sitting at. Two things. Number one, does Ark Invest come in here and buy even more of this? Because it is pulled back considerably, and it is pulled back to what technically is a level where you could potentially buy this one. Because this 240 level was resistance on the way up, and it should act, and we've seen here in the after hours trade, it is acting as support on the way down. Now, two things can happen here. We can bounce here and we can kind of chop around, consolidate, or kind of bounce back up into this 250, 260, 270 range. That is one possibility. The other possibility is just like on the way up, when we break this 240 level with a solid green candle, well, we could break it with a solid red candle. And if you do this, I would consider 210 in play. 210 is in play because it was a top here and it was a top here. We solid green candle it here. So 210 in my opinion, and it was acting as some support here. 210 is a nice spot here in my opinion, where you could potentially want to maybe go a little bit low. Let's say you want 5 shares of Teladoc, just a scenario that we're playing out. You want 5 shares. I could see buying 1 share right here at 240. Okay, and seeing what happens, because this thing could bounce and it could go up, and you could play a little bit of upside bounce on that sense. The other thing to do is if it's solid red candles here, well, you'd feel like an idiot if you bought all 5 shares right here. So as it approaches 210, I think you could buy 2 shares, maybe even 3 shares if you felt a little frisky that day. But when you got down to 210, if the momentum and the trend on this one would be going down, we could come down here to about 100, and I'd call that 180. We'll just use round numbers so it's easy for you guys to comprehend this thing. We could come down here to 180 because that was kind of the lows that we made several times on this stock before this kind of monster uptrend that we've made over the last couple months. So there's a couple levels here. It'll be this 240 level is a very critical level. If it breaks that, then the odds, I wouldn't say the odds are, but the probabilities are higher that we come down to about 210. If you break 210, you're probably coming down to 180. So momentum is negative in this one, but it will be a lot have to do with what Ark Invest decides to do with this one. Do they decide to add to this one? Do they cut bait? What do they decide to do? It is the top holding in this ETF. That means it's a key position with them. I wouldn't necessarily anticipate them unloading it. And if they did, I think these lower ends of this spectrum on the price chart would probably come into play. But soft guidance, very, very unprofitable company, and I don't necessarily think that's going to continue. I don't think you need to necessarily rush into this one. We had a long sideways consolidation on this one from the middle of last year to really just to the beginning of this year. This stock consolidated sideways for 5 or 6 months. Wouldn't surprise me if it does the same thing heading into this next year. I think you're going to have multiple opportunities to jump in here and get Teladoc. So hopefully you guys enjoyed this one. We'll be back again soon with more videos. Good luck with your investments.